Okay, first of all, please pay attention to what I'm going to say right now. This is a risky indicator, okay? I've seen it do different things. Back in February, we had a deviation of 0.5. The industrial production was actually expected to be flat at 0%, and it came out at negative 0.5, which was supposed to be very bullish for GBP USD. But we only saw a move of about 18 pips, and then the price retraced and plummeted down by 50 pips. Okay. Then in March, we had a deviation of 0.7%. They expected industrial production 0.1, and it came out at 0.8 as far as I remember. And we saw GBP USD plummet down by about 16 pips, literally spiked down by 16 pips, and within about 5 seconds completely retraced to the pre-release price. Then it hung around at the pre-release price, and then it eventually went down by another 20 pips before retracing, or 25 pips or something. So bottom line is, this is a little bit of a crazy indicator, and the reason I would like you to pay attention is that, as you know, I am using two different brokers. I'm using MB Trading, and I'm using Owanda. Owanda is a little bit unpredictable with their spreads. They can raise the spread on GBP USD to 20 pips right before the indicator, which would mean 10 pips on a buy and 10 pips on a sell. And it would be too high of a risk to use with our regular triggers. So on the Owanda account, I have set up the weapon to only click buy or sell using 5 pip bounce, but only on the conservative triggers of +1 or -1, okay? So that's important. On my NB Trading account, I will be using the 5 pips limit triggers. And basically what that means is, NB Trading usually doesn't raise the spread. They're very liquid during the news. I know they're quite expensive on their commissions, but most of the time their spreads stay a lot more tight than other platforms such as Dukanscopy. So I prefer NB Trading for news trading. But basically, for the regular triggers here of +0.5 or -0.5, I will be using NB Trading with very tight limit orders of 5 pips either direction. If I don't get filled, that's fine. But I'd rather not get filled on this particular indicator than get a bad fill, because this is kind of a spiky indicator that's not really known to create directional moves, okay? So first of all, what is industrial production? Industrial production covers two sectors. It covers manufacturing sector and mining sector. Obviously, there's not much mining going on in the US, so it's mostly the manufacturing sector. And nobody cares much about this indicator in the US. In the UK, it's a lot more important indicator. I mean, a deviation of +0.5 in the UK can easily move the pound or the pound-dollar pair by 50 pips or more. In the US, nobody cares about it. At least it hasn't been too popular lately. So, it's a whole different story. It's a riskier indicator. Last month, we saw a drop of -0.2 in industrial production. So last month, we have the number coming out for March, and this month we have the number coming out for April. So they are expecting, usually after such a drop of -0.2%, since this indicator is calculated on months-over-months basis, they are basically expecting it to recover what it lost last month and a little more. So they are expecting the number to come out at 0.3% versus -0.2% previous months. And by the way, as you can see, the housing really did something crazy to the market. First we saw no move, then we saw a little spike up, then the GBP USD moved down by 20 pips, and now it recovered back another 30 pips. So as you can see, it would be impossible to trade this one. Too many conflicts. Anyway, going back to the industrial production, pretty straightforward. Pretty straightforward. We do have another one coming out, which is capacity utilization, which is expected to come out at 81.5% versus 81.4% previous months. And capacity utilization is basically how efficient the factories are working, and how much of its capacity are they using to produce. And the higher the capacity utilization, generally speaking, the better. We are coming up to approximately, let me see, to about 12 minutes until the indicator, about 13 minutes or so. And under normal circumstances, I wouldn't even wake up for this one if it was on its own, but usually it's preceded by an 8:30 announcement, such as today housing starts, and then since this comes out 45 minutes later, I figure might as well trade it and see if we can scalp off, 10 pips or something. I mean, honestly, if I can get filled within my 5 pips target on a regular trigger, I would be very happy with a 10 pips profit. I'm really not expecting much more. I mean, give the fact that I may get slipped 5 pips and then take another 10 pips off the table. The total move may only be 17 or 18 pips. I haven't really seen it move much bigger, especially on the deviation that I've set there. So we'll just see what happens. $20 seconds, 15 seconds. Again, as soon as you can see profit, just take it. 10 seconds, 5 seconds, okay, came out better than expected at 0.7%, but it didn't hit our trigger. So let's just see how the price reacts here. So as you saw, the price was at about 98.24, 98.25. Industrial production came out at 0.7% versus 0.3%, which is relatively big. There was a very small revision from negative 0.2% to negative 0.3% from previous months. As you can see, nothing is happening. You see that? GBP USD is supposed to go down, the dollar is supposed to get stronger because the industrial production came out high. And the capacity utilization came out at 81.6 versus 81.4 prior months. And we've got nothing. I've re-enabled the text room entry if you want to chat. Joseph Wilson, you see, the thing is I don't enter limit orders before the release. I haven't prepared, and I let the weapon click buy or sell, and at the time it clicks buy or sell, that's when the order is submitted. As you can see, the GBP USD is weakening a little bit. It went down by about 6 pips so far. But I mean, come on. you know.